Hi there, this is Gia Freer with Palm Beach Premier Real Estate. Welcome back. And I have the local market report for May 2019, and I have quite a bit of information, so forgive me if I read. The subject this month is the Federal Reserve about to cut interest rates? Well, that's a really good question. So this month, Grant and I wanted to revisit some of the macroeconomic warning signals that we discussed earlier this year, now that the Federal Reserve has given us some additional guidance for the remainder of 2019. First off, what did the Federal Reserve say? Well, let's look at that. They definitely seem to be backtracking now on interest rates, now that they've acknowledged that the economic slowdown is sharper than they had anticipated, having previously stressed no interest rate increase for 2019. Remember that? So the markets are now anticipating at least one rate cut next month, with another cut likely before the end of the year. So what's going to be the impact of this? Well, we have a massive blow-off top happening in equity markets at the same time as a flight to safety in bonds and gold. So, you just simply can't make this stuff up. As one analyst on CNBC described it, equities are having a recession party. So what does that mean for real estate? I'm sure we're all wondering that. So here's the plus side. The plus side is that we've seen a massive 100 basis point drop in mortgage rates, with the 30-year fixed rate mortgages now starting with a 3. Basically, buyers are getting off their bum to shop because they have more choice and they have a lower interest rate. Sellers, this is a great time for you because you now, if you're priced correctly, you'll have multiple buyers looking at your properties. This is actually good news. Okay? Buyers are definitely going to be attracted. Also great news if you're looking to refinance and do home improvements. Now, here's where we're a little concerned. Number one, the Palm Beach County housing numbers for May indicated that inventory levels and the number of days to get a contract on a home, that was significantly higher. So the translation is more supply, slowing demand. All the more reason why lower mortgage rates right now are really, really important. Number two, there is yet more evidence the consumer is tapped out with consumer debt at record levels. Number three, while real estate sector stocks have increased with the broader market, a closer look indicates that it's the single family REITs that have largely benefited from the move and not the builders. Now, a REIT is otherwise known as a real estate investment trust, and they have lower interest rate plays with high dividend returns. Number four, consider this. Stocks have been pushing all new time highs, while at the same time mortgage applications are down and inventory of homes are increasing. So clearly there is a disconnect occurring. Number five, the inverted yield curve continues to overhang the market, while at the same time a massive flight to safety is happening. Let's just take a look at gold, for example. It's breaking 5-year highs and bond yields. There appears to be a massive scramble to buy assets that are perceived to be safe. Number six, we also have a split with the 17 Federal Reserve board members. 8 of those members are advocating a cut in interest rates. 8 of them are advocating leaving everything alone, and only 1 is advocating an increase in interest rates. Now, keep in mind, the primary goal of the Federal Reserve is a strong jobs market and stable prices independent of political pressure. And finally, number 7, worldwide economic growth slowdown concerns continue to be a major factor as to declines in business confidence surveys. So clearly the housing market is facing some headwinds, which I know we talked about the last time, so I'm going to go ahead and repeat that portion. Number 1, we've reached the top of a debt cycle. Remember, I mentioned top of a real estate cycle. Real estate cycles run every 7 to 10 years. So the top of our real estate cycle was 2018, the bottom was 2008. So it makes sense that we are starting our downward leg. Number 2, we've reached the top of a debt cycle. And we've had 4 interest rate increases by the Federal Reserve in 2018, 9 in total in that 10-year period. That has created headwinds. At the same time, we are starting to see a decline in interest rates, mortgage rates right now for buyers. So keep that in mind. Number 3, buyers have price fatigue. Property values have increased faster than wages have increased. So something has to give. Either people are going to get paid more or the prices have to come down. So most likely the prices are going to have to come down because what's going to occur most likely. So looking ahead for the rest of 2019, this is what we are going to be seeing. First, the average household cost to service debt has reached a point at which it'll become more difficult for first-time buyers trying to get a loan. Second, housing affordability issues will continue to be a theme going forward. Third, inventory will continue to increase, prices will soften, and properties are most likely going to stay on the market for longer periods of time. Finally, number 4, the effects of the worldwide economic slowdown will be felt here in the United States throughout 2019 and 2020, and it will have a knock-on impact on the housing market. So we're definitely moving forward going to keep a continued close watch on prices, interest rates, inventory levels, and the number of closed sales. So how about some takeaways? Again, buyers, now's the time to step into the market and take advantage of that 30-year fixed rate mortgage, which is under 4%. I mean, that's just awesome news. And now that inventory has been increasing, you guys have plenty to choose from. Sellers, expect more offers if you're priced correctly. We are seeing multiple offer situations in correctly priced properties. So if you price it right, you'll be in a really good position to get the property sold. So right now, just so everybody knows, this is a beauty contest and a price war. So if you guys have been considering buying or selling real estate in today's market, give us a call here at Palm Beach Premier Real Estate. We would love to talk to you for a confidential consultation. You can reach out to us. The phone number is here below as well as our email address. Phone number 561-395-8418. Email is info@pbprealestate.com. Again, this is Gia Freer with Palm Beach Premier Real Estate. Thank you again for watching.